Yo, what's up, everybody? Welcome back. I hope you had a nice Christmas, Hanukkah holiday celebration. It is Tuesday, December 27th. Markets were mixed today. Folks, the whole week is going to be kind of like a holiday environment. Light trading, thin markets. NASDAQ had a weak day. I mean, today was the lowest close on the NASDAQ since the low close, the 52-week low close of November 3rd, if I'm not mistaken. So NASDAQ looks a little heavy. I don't like to characterize, I never try to say the market looks a certain way. I just think if you fall into that trap, and I shouldn't do it, that's part of mental game and it should be excluded. I always say that language is very important. The way you express things, I mean, that feeds information into your brain. That kind of, molds your brain in a way that it affects your behavior. I don't like, when everyone else says it that way. I never say it. I just said it right now. But I mean, I don't like to say the market looks a certain way because, that's not scientific. That's an emotional assessment. It is evidence of emotion maybe creeping into my own outlook. And, that's a red flag. You got to be aware of that. When you catch yourself using language like that, that is a tip off to your mental game that it's getting a little weak. You got cracks in the mental game. So there you go. I mean, I just gave you an example based on myself. I got to stick with what I do, and that is, I'm looking at the core, the fiscal flows, etc. And by the way, in today's market, there were some winning sectors. I mean, banks bucked the trend. They look good, all right? Commodity sector, gold, home builders were good. Industrials were good. So there you go. Hey, one thing I found interesting is that if you look right now at the list of the world's richest people, Forbes has the real-time billionaires index. If you just Google that, and here it looks like this. Elon Musk now really slipping. That's what the Tesla's getting hammered, that stock. Number one is Bernard Arnault of France, and he owns all those brands. That's LMVH, Louis Vuitton, Moet Hennessy. Visionary guy, was a visionary. Way back when he started to perceive the value of those brands, and he started snatching them up one by one. And, look at his position now, richest guy in the world with 180 billion. But anyway, what I find interesting, you also have this Indian dude, number 3, this Gautam Adani. And he looks like pretty soon he could overtake Elon Musk if Tesla keeps going the way it's going. But look at also Warren Buffett. Warren Buffett is poised to leapfrog over Jeff Bezos. Warren Buffett, who never invented anything. I always like to use him as kind of an example of savvy stock market investing. He's done that over, the guy's like 90 something and he's done that over his entire life. But he never invented anything. He never created a new industry. It was all through accumulation of, and a lot of the companies that he owns, a lot of these companies, they're just kind of like plain vanilla. It's not like he bought Amazon when it was a couple of bucks and then rode that up, or same thing like with Apple. It's an interesting guy. So yeah, and then you have another Indian guy under that. It's interesting because we're seeing now a lot of these billionaires who are rising are not from the United States. All right, they're from Asia, India. So that's very interesting. Anyway, that was just like a kind of like, I just found that to be curious and I wanted to mention it. So yeah, here's the thing, folks. fiscal flows right now, we got our typical mid-month kind of doldrums. Tomorrow is another Social Security payment. We're currently running at about 22.5 billion is the average daily leading flow. That's the spending, daily spending government. That comes out to about 450 billion a month. And I think if you average out, over a quarter, we're around 500, maybe slightly over 500 billion. I mean, that's still, you're talking about still 25% more than where the spending was pre-pandemic. So even though we have had a historic, really, contraction in the fiscal flows this year in 2022 compared to 2021 because of, the end of a lot of that COVID stimulus, we're still running at around 25% higher than pre-pandemic levels. So, that's going to translate into positive economic growth. We're not going to grow at 10% or 7, 8, 9%, but, we'll be right around the 3%, 2.5 to 3.5% growth level. So I'm not worried because, as I said in a prior video, the stock market will follow what's happening in the economy. If the economy is expanding, the stock market is going to go up. Profits are going to increase, and we're going to see that play out in higher stock prices. Now, some sectors of the market are going to do better than others, like I pointed out today, like banks. And by the way, banks longer term, I mean, the picture looks like crazy bullish because if you consider the amount of interest on reserves that the banks are receiving now because of thanks to the Fed paying interest on reserves. I mean, it was just an article that I saw today. It was all over the internet about how banks over the next 10 years will be, if rates stay where they are, is going to be something like $1 trillion of free money just dumped on their balance sheets. I mean, it's really, really, that's an unprecedented thing. I mean, it's, whether you are for that or against that, as an investor, I'm saying you got to put your money with the banks because that, you're just going to see bank stocks are just going to continue to go higher. Now, right now, the trend is a little slow, but that's fine. I mean, that's normally the way it is at the beginning of some kind of a major trend. A lot of people are not focused on it. A lot of people don't understand it. They're not paying attention to it. And, trends tend to build over time and then they start to accelerate and accelerate. And when they really start going parabolic, that's when you want to think about taking your money out. So we got that going on. So yeah, there's going to be sectors of the market that are going to outperform others. Obviously, right now, tech is the weaker sector. We saw that. We also saw that, in the past, prior times, historically, the dot-com bubble burst, and then after the 2007-2009 financial crisis, it took time for tech to recover, and then it eventually took over on the upside. And now, those stocks tend to be a little bit more leveraged, so you get more volatility in those stocks. It's not really something I'm worried about. Again, I focus on basic economic conditions. All right? I don't look at the squiggles in the stock market. I look at basic economic conditions. If basic economic conditions are telling me that things are in expansion, I'm not too worried, regardless of what the market does, because, in a growth scenario, things are going to be okay. That doesn't mean everything is going to be fantastic. As I said, there's going to be some sectors of the market that are going to do better than others. I just gave you one which I really think you should concentrate on, and that's financials, particularly bank stocks, industrials, commodities. By the way, these guys, I mentioned that those two Indian guys who are climbing up on the Forbes rich list, they're basically in industrials and commodities. So you see where now, as I've always said, when you have these paradigm shifts, whether that's inflation, whether that's rate increases or rate cuts or deflation, the income doesn't fly out into outer space. It gets redistributed. And we see that very clearly in the rankings, right? I mean, you see that. That's a perfect example of what I've been trying to explain, is that you could see that in the rankings of the wealthiest people. The money is flowing now to these commodity guys, these industrial guys, and also, the foreigners. And they're coming out of the tech companies that are getting hit. So it's not like everybody on that list went down. No, some people went down and some people went up. And that's, that's a small little microcosm of the big picture of what I'm talking about. In every scenario, whether you're talking about inflation, whether you're talking about deflation, whether you're talking about rate hikes or rate cuts, there's going to be winners, there's going to be losers. Now, I've said in the past, like, part of our job, part of your job as an investor, is to isolate or identify where the winning sectors are going to be. I don't think that's too hard. I mean, if you have a grasp of the big picture, and I'm telling you this right now, we're in an economic expansion. Yes, it's not a 10% annual GDP growth rate, but it's not like a 0.5% growth rate either. It's about what we've seen, like, basically over the past 30 years. We're right in there, like at the 2.5%, 3.5% growth pace. That's basically the U.S. economy in a nutshell. I mean, we've had that for maybe more than 30 years, maybe like 40 years. We've had that. Since the 80s, I guess. So let's call it 30 years for sure. 30 years for sure we've had that. So, I mean, what's there to get all worried about? We're basically back to a situation that defines normalcy in the U.S. economy. The problem is, like, everybody has short-term memory. So they're thinking about 2020 and 2021 when they were getting, $1,400 checks in the mail from the government, and they were getting $600 a week unemployment on top of their regular unemployment benefits. And they're saying, like, wow, things are terrible. It's not terrible. We're just going back to what is normal growth for the U.S. economy. People get all flipped out because it's not yesterday anymore. Okay, yesterday was an aberration. It was special. It was something outside the norm. We're back to normal. We're back to normal, and normal is not so terrible. It's not so bad. So everybody is hysterical now because the economy is back to the way it looked over the last 30 years. And nobody was hysterical over that period of time, but now they're all hysterical because it's not 10% growth and all this money being sent out for free. Not to us anymore. I mean, the banks are getting the money now. So don't be a dummy. Buy bank stocks. Like ride on the coattails of that. Ride on the coattails of that. That's all you got to do. It's like I said, by the way, energy stocks, I forgot to mention. Oil was up today, almost back to 8. It was like 80. WTI was like $80 a barrel. So we're up nicely in the oil. Russia is going to stop selling oil to any country that complies with the G7 price cap starting February 1st. Also, what has begun is the U.S. is replenishing the SPR, the Strategic Petroleum Reserve. I told you that, what was it, last week or the week before? So the oil picture, I think, now looks pretty bullish. You got that sector to focus on. So there's ways to make money. And again, as I said during the whole inflation thing, it's on you, okay? Now, That doesn't mean I expect that you're going to be able to offset completely your expenses and the rising costs. No, I understand that. I understand that. But at least do some. I mean, something is better than nothing. Presumably you watch this channel to get like investment insight or insight on the economy or MMT or whatever, which I try to provide to you. So use that knowledge, use that information, even if you just have a little bit of money to stash aside. I mean, a little is better than nothing. And that's how you build. That's how you build. I'm watching this guy who he deals in watches. He's a watch dealer here in the on 47th Street in New York City. Young guy. And it's very interesting how they know the market, like for Rolexes and stuff like that, and Patek Philippe's and Audemars Piguet and all those, really the fine watches, collectible. And he's doing something very interesting. Young kid, right? He's got a Instagram or a TikTok channel, I forget, but I follow one of them. And he said he's starting out with $450. He bought this ring for $450. Okay? Somebody came in with like a personal ring and he sold it to this kid. The kid has a booth there on 47th Street. He bought the ring for $450 and he said, I'm gonna keep on flipping this until I hit $100,000 by March 1st. I think he said March 1st or the end of March. I don't remember. But he said, I'm going to take this. His first transaction was $450. And he's doing this by basically, scalping the market. He knows value. So like now he's up to like 2,500 in like 2 weeks. Okay. He started out with 450. So I'm very interested. But here's the point. The reason why I bring this up, I want to make the connection that you don't have to start with a lot. You just have to be patient and you have to have the information and, you got to have the behavior. Okay, you can't go willy-nilly buying something, selling one day, buying the next day, like all these headline traders. Market goes down, there's bargains there. I gave you some sectors, banks, energy, commodities, again. When they go down, you get in, things go up, you build over time. You build over time. Everybody wants to make $1 zillion overnight. And then they're frustrated when that doesn't happen. If you could just think of things as a growth curve, a progression, and be patient about it, you'll reach your goals. I'm telling you, you'll reach your goals. Anyway, let's see if I can find the link to this kid. I'll put it up there in the description below, so check it out. But very interesting. He started with $450. His goal is to make $100,000. That's fast, man. That is fast by March. But some of these watches, as soon as he gets up to the high-level watches, like the Rolexes and stuff, now you're talking about 15, 20, 30, 40, 50, 60,000. I mean, you could make thousands, or they really know the market, and they, people come in, they sell their watches, and they're able to they're like sharks over there on 47th Street. If you've ever been in New York City and you go down to that Diamond District and you walk into any one, you don't even have to walk into one of those places. You just walk down the street. Okay? It's between 5th Avenue and 6th Avenue on 47th Street. That's the Diamond District. Just walk down the street. They got like people standing out these shops that almost literally physically grab you and haul you in. And once you're in, it's like you're in a shark den, man. You're not getting out of there unless you buy something, unless you're really, really strong and have very strong discipline. It's a fascinating place. I mean, you just walk down the street and it's like windows upon windows upon windows of diamonds and high-level watches and all kinds of jewelry, and it's incredible. But yeah, these people are like sharks, man. Sharks! Anyway, that's it for today, folks. Go to my website, pitbulleconomics.com. Sign up for a 30-day free trial of MMT Trader. Let's make some money. 2023 is coming up. I said it's going to be a good year. Let's see. Bye.